Good afternoon, everybody. Not quite afternoon, good morning. I'm going to talk about the 3 key things you need to know about the future of financial services. Now, when I talk about the future, I'm thinking about 10, 20, 30 years ahead. I'm not talking about tomorrow. I'm not talking about next year. So just to set the context. But before we kick off with this, let me just paint a scenario for you. So how many people here have bought a home in the last 2 years? Show of hands, how many people? Gosh, bought only 3 people. The property market is really dead in London. But for those of you who have bought a home in the last 2-3 years, approximately how long did it take from you deciding I want to buy this property to you actually owning it, roughly, in weeks? How many weeks? Anybody?
12.
12 weeks. Anybody else?
5 weeks.
5 weeks, anybody else? Okay, so we're definitely measuring in weeks and possibly months. Imagine a scenario where you can buy a home in 10 minutes. 10 minutes. So let me paint that scenario for you. You're looking for a property. You find the property you like. You pull out your smartphone. You open up an app. You hit the app geolocates the property. The app gives you a valuation of the property. You can compare that to the price that's being asked for that property. The app then has already curated all the information about you as an individual, your credit history, your educational history, your employment history, your tax returns, your property owning or renting history. It's already curated that. So it has a full picture of you as an individual. It is pinging a series of lenders, insurance companies, pension funds, hedge funds, who are looking for just your type of risk. And it comes back and it says, the property you want to buy costs £250,000. I can get you a mortgage for £200,000 at this interest rate. You've already got £50,000 of savings. Hit yes, you hit yes. And at that point, the app executes simultaneous transfer of ownership from the vendor to you, simultaneous creation of the mortgage from the lender to you, and the creation of a smart contract that records all the terms and conditions of that loan and sets up the payment schedule and sets up a set of conditions for if you can't make your payments. It might set up the conditions where you can pay more every month if you want to bring your loan down. It might set up conditions where if you miss a payment, these are the things that happen. All recorded on a set of distributed technologies powered by artificial intelligence using tokenized records for the property ownership itself and for the loan itself. Now, is this science fiction? Absolutely not. I first described that scenario 3.5 years ago in a speech I gave at the House of Lords on this exact same topic. And in those intervening 3 years, what was then a set of technologies that people were developing are now a set of technologies that are seasoning and getting ready to be delivered into the market. And one of my predictions is that in the next 10 years or so, you will be able to have exactly that experience. And I'll tell you why. But just to back up for a minute, as many of you know, I spent 30-odd years working in the financial service industry, mostly working for large banks. And I was always puzzled by 2 questions. One, why don't banks serve their customers better? When you're the customer of a bank, you are, basically at their disposal. The customer experience is horrible. Net promoter scores are horrible. Customers do business with banks because they have to. And the second thing was, why hasn't technology created real transformation in banking? We've seen a lot of innovation. We've seen the development of ATMs, credit cards, derivatives, these types of things. But we've seen very little true transformation in the industry, unlike what we've seen in other areas of our lives. And I was fascinated with those 2 questions for 20 years. And the conclusion that I came to was actually the technology itself had not yet reached a point of capability at a price point that was sophisticated enough to create real transformation. And the hypothesis that I had in, say, 2012, 2015, and after I left Barclays and set up 10x Future Technologies was that the technology had actually arrived to create this transformation. And I'm pleased to tell you that the technology is there today. The technology has been created by big tech companies for their own business. It's often referred to as cloud-native technology. There's a big difference between the cloud, which is basically about buying flexible hardware, and cloud-native technologies, which are a set of tools that allow you to develop and deploy software and test software much more quickly and cheaply than you can do in the traditional world. Now, these cloud-native technologies have been all developed by the big tech companies for their own business, but are largely available on an open source basis to everybody else. So the good news is the tools have arrived to allow us to create this transformation. The other good news is, if you really look at what's going on in terms of computing power, networking, and storage, the cost of that continues to fall and the capability continues to increase. So the good news is we now have a tool set that allows us to build the future of financial services. What you see in the FinTech world today was not possible 10 or 15 years ago, not because people couldn't think of it, but because they couldn't deliver it. The toolkit didn't exist. So what's the other thing that's happened? In the autumn of 2015, I gave a speech at Chatham House, not far from here, where I talked about the Uber moment in financial services, the point at which true transformation began. And I said we were approaching that point. And I think I would agree with the previous presenter. I think we are past that point now. Because what we've seen in the last 4 or 5 years is that we have demonstrated that customers will shift their behavior where they have a better experience. Whether it's Revolut, TransferWise, Monzo, Funding Circle, or any of these other companies, they are out there building customer bases because they're offering something that's better than you can get anywhere else. Now, is it 10 times better than dealing with the banking system today? Probably not. But can it get to be 10 times better over time? I would argue that it will. So let me turn, with that as context, to the 3 big things that I think are going to define the future of financial services in the next 10, 20, 30 years. And helpfully for me, because I can only remember 3 things, there are 3 of them, and they all begin with D. So the first is digital identity. The second is data-driven. And the third is distributed. So let me run through each briefly. Digital identity, why is that important? Well, data without identity is not that useful. How many people have opened up a bank account or a mobile account or a water or electricity account in the last year? How many people? And keep your hands up, of you people, how many people were asked for a utility bill? Everybody. How crazy is that? Who has a utility bill anymore? Did you have to go and print one off or cut and paste your name on top of your partner's name, then photocopy it or something like that? What is that possibly proving? What does it possibly prove that you can produce a utility bill with your name and address on? It's absolutely insane. What it is tick box compliance. But in a world where you have a digital identity, all of that changes. Now, the good news is we can see the future, not because we've got a crystal ball, but because we can already see what's going on in other parts of the world. In India, they have created a digital identity for 1.3 billion people. One of the consequences of this digital identity was that they were able to reduce the unbanked population by 50% within 4 years. So the numbers went from roughly 600 million to roughly 300 million. Because when you have a digital identity, you can access the banking system in 2 minutes in India. You don't have to show up with a utility bill and 3 different forms of ID. And I believe that if we're really going to unlock the future of financial services and lots of other things, we're going to have to create a digital identity that is provided probably by the state, and that you, as the user, permission when you want to buy goods and services or sign up for goods and services. Now, it's controversial in liberal democracies because people worry about privacy and security and should the state really control my identity. But actually, as long as the user controls their identity, and as long as they permission it, the benefits far outweigh the risks. And this is one of the Rubicons we're going to have to cross as a country if we're going to access the huge opportunity in front of us with technology, not just in financial services, but in other areas of our lives. The second two areas, data-driven. Of course, you can make better decisions using artificial intelligence and machine learning. I accept that there are problems with bias, but the real issue about using AI and ML is you need big data sets. Now, everything that banks do is about data. Yes, there might be a person-to-person interaction if you've got a lot of money or if you're a company, but mostly it's about data. And banks handle data in an incredibly inefficient way. Data is fragmented over many different systems and databases inside a bank. So over time, what we're going to see is that data is going to be pulled together, centralized, curated, controlled, going back to my earlier point, by the user and monetized by the user. So in the example I gave at the start of this talk, the user was controlling their data through the app to get something in return. I think it's absolutely shocking that we give all of our data away for free to credit bureaus. They make money out of your data. You don't get anything in return except when you apply for credit, it goes into how you're assessed for that credit. So data concentration, data control is going to be part of the future. And the third thing that's really important is distribution. Now, all financial systems are centralized systems today. If I want to make a payment to you, I instruct my bank then moves that money through some central clearing mechanism, faster payments or CHAPS, to your bank, where you can do something with it. That system is very expensive and concentrates risk. And when you concentrate risk, you have to hold capital against that risk. There's a lot of expense to it. Distributed technologies create a network where basically everybody's a node on the network, and we can transfer ownership instantly. That could be ownership of real assets like property, art, diamonds. It could be ownership of securities. It could be ownership of value, i.e. cash. Now, in the distributed world, you don't need banks at all. You just need nodes on the network. So what does this mean? What it means is you can have a mortgage in 10 minutes. Is this fantasy? Absolutely not. Whatever you think of cryptocurrencies, we have proved that you can transfer value in a distributed way. But don't just look at the cryptocurrency industry. If you look at the St. Regis Hotel in Aspen, ownership in the St. Regis Hotel in Aspen is recorded by a token. It's called an Aspen. You can buy an Aspen. If you have an Aspen and I want to buy your Aspen, we can trade it between ourselves. So none of the things I'm talking about are futuristic science fiction. They are all things where there are real use cases today, where the technology is becoming increasingly powerful to create this transformation, and where over the next 5, 10, 15 years, we're going to see big deployments of these things. So the future is going to be based on digital identity, it's going to be based on data, and it's going to be based on distributed systems. What's the net effect of all of this? Well, the first effect is the customer experience is going to increase exponentially, because everything will be instant, and it will be a lot lower cost, because you're squeezing out all the friction cost and all the rent seeking that exists in the system today. There's a reason why banks make billions of pounds of profit. But the second and more important thing is you're going to squeeze out risk. Now, as we learned in the financial crisis, you can't make risk disappear. What you can do is better manage risk. So in a world where a lender and a borrower can be connected directly, that lender can assess the risk and make a fair assessment of that risk and manage that risk directly, as opposed to having to manage it through intermediaries where risk gets trapped and capital gets trapped and cost gets trapped. And finally, as we saw in the example of India, you can massively open up the banking system to people who were previously unbanked. So I am incredibly optimistic about the future. It's predicated on these three key things. digital identity, data, and distribution. And I look forward to everybody in this room getting a 10-minute mortgage in 10 years' time. Thank you so much.